In this video, we will hear from economist, American lawyer, investment banker, speaker, and best-selling author, Jim Rickards. He shares his analysis and well-studied perspective on the price of gold and its future value in the coming years. Jim Rickards has held senior positions at Citibank and has testified before the U.S. House Science Subcommittee on Oversight about the risks and dangers of financial modeling and the 2008 financial crisis.
There are bull markets and bear markets in basically any tradable instrument or commodity, or I consider gold to be a form of money. But the first great bull market was 1971 to 1980. It lasted 9 years and gold went up 2,200%. The second great bull market was from 1999 to 2011. Gold went up at just a little under 700%. Now, I had a very interesting conversation with Jim Rogers. Jim is one of the great commodity traders, money managers of all times. And but this is around 2014. So I said, Jim, what do you think of gold? What are you doing? He goes, well, I own it, of course. And he said, I'm not selling, but I'm not buying right here. And he said something that just hit me right between the eyes and it stayed with me. And of course, he's right. He said, gold's going to the moon. But nothing goes to the moon without a 50% correction along the way. Now it's going up and the sky's the limit. My point was that we had the retracement between 2011 and 2015. That's done. Now it's just onward and upward. Well, we're not overheated at all. I've got gold at, I would put it at $15,000 an ounce before 2025. But as I point out, if you're going to $15,000 an ounce, you got to get to 3,000, 5,000, and 7,000 first. So there's plenty of room to run, plenty of room for profits. I want to be clear. There's a lot of analysis behind it. I don't just pull a big number out of the air and, for publicity, because I could care less. And there are a couple ways to think about it. Just take the average of the two prior bull markets I mentioned. So 71 to 80, 9 years, 2,200%. 99 to 2011, a 12-year bull market, about 700%. Just take the average. You don't have to go to the higher of the two or extrapolate. Just take the average of those two bull markets. You would say, okay, well, the next bull market's going to be a little over 10 years. It's going to go up 1,500%. So using that as your base, just take the average of the two. You say, all right, 10 years from 2015, that puts you out to 2025, puts you at $15,000 an ounce off a 1050 base. So that's just history. But there are other ways to think about it. I don't know if there'll be a gold standard or not, but I do know that the price of gold will move in the direction of where it would need to be if you're going to have a gold standard. And I talked to Paul Volcker about this, and he agreed. If you just took the money supply, so just take M1, which is pretty widely accepted definition of money supply. Take it for the U.S., the ECB, UK, Bank of Japan, and People's Bank of China. That's over 75% of global GDP right there. Divide that number by the official gold, which is about 34,000 metric tons, a little bit less. You come to $15,000 an ounce. So if you're going to either have a gold standard or even use gold as a reference point for money, if you need to restore confidence in the dollar, the implied non-deflationary price is $15,000 an ounce. So what I find interesting is that if you use just the history of the last two bull markets and average them, or if you use a rigorous calculation, what's the implied non-deflationary price? Interestingly, they come out in the same place. I don't think they have to. They're two different methods, but they both point to $15,000 an ounce sometime over the next 3 or 4 years. It is a moving target. The numbers I gave you are based on current levels, but Peter's exactly right. You keep printing money, you're going to need a progressively higher price of gold. My numbers, I think, are conservative. They could be much higher.
Any wise, experienced investor will tell you preparation is key. If you are interested in protecting and preserving your wealth with physical precious metals such as gold and silver, whether in the form of private investments or a gold IRA, see the links in the video description to see the best gold IRA and precious metal investment companies that we have personally researched and vetted. On the subject of strategy, I will leave you with one of my favorite and often used quotes from the Hall of Fame and professional hockey player Wayne Gretzky. I skate to where the puck is going to be, not to where it was. Thanks for watching.